All right, let's just get right into it. Global trade, it's actively choking right now. We've got over 200 crude tankers just stranded in the Middle East. The IMF just came out and slashed global growth forecasts. And look, the rules of investing you learned just a couple years ago, they're not just outdated, they're completely dead.
So here's the first number that really changes the entire game. Global oil supply has plummeted by 10.1 million barrels per day. And just so we're crystal clear on this, that is the single largest supply shock ever recorded in history.
And guess what? The big money is already moving fast. JP Morgan, yeah, that JP Morgan, is now calling for gold to hit $6,300 an ounce by the end of 2026. And look, this isn't some fringe prediction from a newsletter. This is the new institutional consensus forming right before our eyes.
So let's just put it all together. The entire investment landscape has fundamentally shifted. The strategies that made you money before, they're not just ineffective now, they're actually dangerous. The old playbook has been completely torn up and thrown out. So you gotta ask, what in the world is driving all this chaos? Well, it's a fatal combination, a perfect storm of two crises hitting us all at once. We've got a massive energy shock, and at the exact same time, inflation that just refuses to die. This is what we're calling the Great Supply Shock of 2026.
Okay, I know this chart looks a little complicated at first glance, but it tells a really simple and frankly, kind of frightening story. This comes straight from the International Energy Agency. Just look at the two lines. The gap opening up between them, that's the supply deficit. It's like a black hole forming in the world's most critical energy market.
And this table here really breaks down just how dramatic this shift is. I mean, look at the before picture. The market was pretty stable, right? Supply was over 107 million barrels a day. Demand was growing. Now is a different world. Supply has absolutely cratered. Demand is actually contracting for the first time since 2020. You've got those 200-plus tankers just sitting there. And yeah, the price is telling the story.
And this is the real trap. Right as this massive energy shock is hitting us, the IMF comes out and slashes its global growth forecasts. And you ask why? Well, it's because that sticky inflation won't go away, which forces central banks to keep rates sky high. It's a classic stagflationary squeeze, and we're all caught in the middle.
All right, and of course, I have to say this intelligence briefing is for educational purposes only. It is not financial advice. Please do your own research. So, in this kind of world, a world where paper money is losing its value and risk is literally everywhere, where is the smart money going? Where are the institutions putting their cash? They're running for cover. They're running to hard assets. This quote from JP Morgan really just hits the nail on the head. It says investors are willing to give up some income to own something that is nobody's liability. What does that really mean? It means in a crisis, people want to own real stuff. Stuff you can touch. Not paper promises, not someone else's debt. They want things outside the traditional financial system. And here's what that flight to safety looks like in black and white. Just look at these year-end targets for gold. You've got JP Morgan, UBS, Bank of America, the whole gang. The consensus is screamingly clear, and it's overwhelmingly bullish. This isn't just people chasing a hot trend. This is a fundamental structural rethinking of global risk. Look, if you want to get ahead of this massive institutional wave, if you want to front-run this money flow before the retail crowd gets caught in the trap, you need to hit that subscribe button right now. We track the data and the trends that the mainstream completely ignores. But hold on, gold is only half the story. The really smart money knows you can't put all your eggs in one basket. There's a second, equally critical hard asset they're flooding into right now, and that's the actual physical infrastructure that powers AI. You can think of it as the new digital gold. You see, you've got two gigantic forces colliding right now. On one hand, the world is deglobalizing. That's forcing companies to bring their supply chains back home, which means building new stuff. On the other hand, you have the AI revolution, which isn't just about software, right? It needs a colossal physical build-out of data centers, fiber optics, power grids, the whole shebang. Owning that infrastructure today, it's literally like owning the picks and shovels during the gold rush. Okay, but let's be intellectually honest here. We have to play devil's advocate. Every great investment thesis has a risk, a potential trap, and for gold, the big one is what I call the de-escalation trap.
It's the one question every single person in this trade has to be asking themselves right now. What if peace breaks out? Like a real, lasting peace. What happens then?
So this slide lays out the two potential roads for gold. It's a fork in the road. Path 1, the conflict continues. In that case, the bull case from banks like UBS sees gold pushing past $7,000 an ounce. But path 2, sudden peace. If that happens, that fear premium that's baked into the price could just evaporate. Poof. HSBC is really the only major bank flagging this, and they see a potential drop back towards $39.50. For anyone who's leveraged up, a sudden peace deal could mean a brutal, violent correction.
So, how do you navigate a market like this, with this massive fork in the road? Well, it takes a smarter strategy than just blindly buying one thing. You have to build the ultimate hedge for this new world. And that's what we're calling the 2030 fortune stack. Because the ultimate hedge for the decade ahead isn't just gold. It's something smarter. Some analysts have started calling it the electric stack. And it's designed to do two things at once: capture that flight to safety and tap into the powerful long-term megatrends that are remaking our entire economy. So here's what's in it. Two core components. First up, silver. Seriously, think of it as gold on steroids. It gives you all that safe haven protection, but it's also an absolutely critical industrial metal. You literally can't build the green energy transition without it, and the market is already deep in a supply deficit. Then, component 2. AI infrastructure real estate. We're talking about owning the actual physical data centers, the logistics hubs, the backbone of the new digital world. While everyone else is chasing the hot new software company, you own the physical buildings it all runs on. That is where the real fortunes of the 2030s are being built. Look, this new reality is creating just massive dislocations, but also incredible opportunities. Click the video on your screen right now to see our breakdown of the 3 shipping ETFs that are already up over 300% this year because of this supply shock. You do not want to get left behind on this.